What's the minimum amount of overseas pensions brought in when you have to file a Thai tax return?
Yeah, good question. So if you bring in foreign source income, which includes pension income, and you're a Thai tax resident, so that means you're 180 days or more in a calendar year, then you need to file a Thai tax return if you bring over the minimum threshold. So now this depends whether you're married or if you are going to file singly and or if your spouse has an income. So if you're married and your spouse doesn't have an income, then the minimum thresholds to file is only 220,000 Thai baht of pension income that you bring into Thailand before you have to file Thai tax return. Now, if you are filing singly or your spouse has a Thai income, then the minimum is only 120,000 Thai baht before you have to file a Thai tax return for pension income. Now, there are some exclusions under double taxation agreements. So things like civil service pensions, US Social Security pensions, and Canadian pensions, for example. You don't need to file for these income sources, but pretty much every other type of pension income, if you remit, transfer to Thailand, and you live here 180 days or more, you need to file a Thai tax return.
Who has to file a Thai tax return? Does everyone have to file?
So, no, just because you live in Thailand, it doesn't mean you have to file a Thai tax return. So, there are certain criteria that you have to meet. So, this depends on whether you have Thai domestic income. So, if you have a Thai rental property, for example, or you have a Thai domestic salary, then you have to file a Thai tax return if you're over the minimum thresholds. But also, if you're in Thailand 180 days or more and you remit, which means transfer foreign source income into Thailand, then you potentially have to file a Thai tax return. So, what are these income sources? Things like pension, so retirement income, investment capital gains from overseas, rental property income from overseas, or if you sell a property overseas and bring the money in, these are all accessible income sources. Other things like overseas salary or dividends, if they are remitted, transferred to Thailand, or spent on an ATM card, then this is classed as foreign source income. So if you're over the minimum thresholds, then you need to file a Thai tax return. Minimum thresholds are really low. So if you're married and you're filing jointly, 220,000 Thai baht for salary and pension income, half that if it's any other income source. If you're filing singly, then it's only 120,000 Thai baht if you bring it in pension, and 60,000 Thai baht if you're bringing in most other income sources. So the thresholds are quite low to have to file. You can use tax paid in another jurisdiction potentially as a tax credit, depending on the double taxation agreement. But no, not everyone has to file. It depends if their income source is excluded and if they meet the criteria to have to file.
Do people with DTV visas have to file a Thai tax return?
Yeah, so it's a good question. It doesn't really matter on the visa type. It depends on the criteria, whether they are a Thai tax resident or not, or whether they have Thai domestic income. So potentially, yes. If they have a Thai domestic income or they have a Thai rental property, yes, they have to file. Or if they live in Thailand 180 days or more in a calendar year and they remit, so transfer in foreign source income over the minimum thresholds, which are really low, then they need to file a Thai tax return. These are things for like dividends, salary, pension income, investment capital gains, rental property income. If they bring these types of income into Thailand and they live in Thailand 180 days or more in a calendar year, they have to file a Thai tax return if they're over the minimum thresholds.
Do people with elite or privilege visas have to file tax return?
So, good question. It depends. So, it depends whether they have meet the minimum requirements to have to file a tax return. So, if they have stayed in Thailand 180 days or more in a calendar year, and they bring in, so remit foreign source income into Thailand, and it's over the minimum thresholds, then yes, they have to file a Thai tax return. So, this can be things like rental property income, overseas pension income, investment capital gains or selling a property or receiving dividends or a salary. If they bring that into Thailand and they've been in Thailand 180 days or more in that year, in the calendar year, yes, they have to file a Thai tax return. They could potentially claim the tax credits for tax paid in another jurisdiction, but they have to file
Do crypto traders who live in Thailand have to file tax return?
Yeah, so it just depends on what they're doing. So if they stay in Thailand 180 days or more, they are a Thai tax resident. Let's focus on overseas exchanges. So if they make a profit on their crypto exchange, they sell assets and they remit, transfer this into Thailand, then they're liable for the capital gains on those assets that are transferred to Thailand. They have to file that on a Thai tax return if they've been in Thailand 180 days in that calendar year and they've remitted, transferred that foreign source income into Thailand. If you would like help with this, feel free to get in touch through expattaxthailand.com.